Hello and welcome. In this video, we are going to be going over our newest set of scanners. These scanners have been optimized for mobile viewing. I know a lot of folks these days are trading on their phones, and so we wanted to set it up so you could easily view the scans on your phone or tablet. I'm not sure too many people are trading on a tablet, but just in case, it will work. Um, and so to break it down, we do have actually three scans. We have the bull scan, we have the bear scan, and then we have the bulls and bears scan. So the bulls and bears is what you see right here. And this is kind of an all-in-one view. So if you're viewing it on a desktop or a laptop and you have a bigger screen, you can look at everything all at once. If you select just the bulls or just the bears, what you will see are these sets here. So this is just the bull side, this is just the bear side, and if you're looking at it on your phone, you will only see one or the other if that's what you select. Here we have the bulls and bears, which has both combined, and also a few other additional bonuses, which we'll go into in a second. So the basis of these scans is that we start with a watch list. We don't open the scans up to the entire market. It's just way too many stocks. So we take a watch list of between 180, 200 stocks right around there, curate it, and we run all our scans through those stocks. It's a good blend of sectors, it's a good blend of prices, and we just base our scans on that. So are there plays outside of these scans and outside of these watch lists? Yes, of course. But we narrow it down to try to just find the best plays with the most volume, the most option volume, um, and just overall, the best liquidity. So with that being said, let's jump into this, and I'll go over these bonuses that we've got first up here, since these will be the fastest. So what we have here is the X versus SPY. The X versus SPY is a list of the sector ETFs. A lot of them start with X, so we just call it X versus SPY. And we use this list to see what sectors are leading or lagging on the day. Okay, and we compare it to SPY. SPY is generally considered the benchmark. It's usually in the middle of this list. It's a little bit lower on this day. I'm recording this on a Sunday night, so this is all like a snapshot of Friday's close. It was kind of a crazy day on Friday, so some of this stuff is a little bit unusual in what we're going to be looking at here. But um, so these here are the sector ETFs versus SPY. And actually, let me just change something here real quick. This might make it a little bit better. All right, there we go. So what I had on here before was a mark percent, which gives pre-market information. And because this is on a Sunday, it was throwing it off a little bit. So this is actually a percent change. This is where it closed. And as you can see, SPY is right in the middle. So that's where it usually is, right in the middle. And we look at this list for a couple of reasons. Number one, we can see what sectors are leading or lagging, and then we can go into these sectors and look for plays. If we want to find stocks that are bullish on the day, we can look at the stocks that are in these sectors here that are trending above average or trending above the benchmark. And opposite is if we're looking for a bearish play, then we can look for some of these stocks that are in some of these ETFs here and find some bearish plays because they're trading on the day lower. They're trending lower than SPY. So that's one way we can use it. The other way we can use it is to look for reversals. So SOXL is a great example. SOXL is never in the middle. I've never seen it in the middle, anywhere near the middle. It's usually in the bottom two or the top two. It just kind of flip-flops. It has bigger swings than most of these other ones. And it usually will reverse from day to day, or it'll be a couple days at the top and then it'll flop back down to the bottom, a couple days there, and then go back to the top. So this is one that is, you know, I've personally never really made these kind of plays, but one thing you could do is if it's down here trending below the average, is at the end of the day you could buy calls for a week out or 2 weeks out or whatever in anticipation for that reversal. Or the opposite way, you could, if it's up at the top, you could get some puts um, in anticipation for that reversal. So that is another way to play this. But overall, just to kind of see what sectors are doing what on the day. Okay, so that's going to be right here. These two lists here are the top gainers and the top losers. Again, this is going through our watch lists, so it's not the top gainers or the losers of the entire market, but just in our pretty large watch list. This is what we look at. This is with no other factors, only percent change. Okay, we're not looking at really any other strat or any other factors are considered here. It's just strictly the percent move. Okay, so this will just give you a snapshot of kind of what's moving up and down. All right, this down here is Bookmap. If you guys probably are familiar with it, or if you're not, there's a lot of videos out there. You can get this through Thinkorswim, and you can get ES for free. ES is the S&P 500 future index, and we put this up here just as an overall kind of guide of what the market's doing. And also, if you're trading SPY or SPX, this is good to use, and you can see where the buy orders or the sell orders are placed. Okay, if you've never used Bookmap, it's really a good tool, and I recommend looking into it. Now we get into the meat and potatoes of it. So these are the bear and the bull scans, and these are strat-based scans. So if you are familiar with the strat, you will kind of understand what we're talking about. I'm going to go over a few things with the strat. The strat is by a gentleman named Rob Smith, and it's a pretty interesting concept. I'm not going to go too in depth in it in this video. I'm going to try to keep it kind of concise, just strictly talking about the columns here that we have. But if you're interested in the strat, you can just Google strat by Rob Smith, and there's plenty of educational info out there, and also through the Discord. So the basis of the strat is we look at where the stock is trading currently versus where it opened. Okay, and we look at that on different time frames. All right. We have a concept called the TFC, which is time frame continuity. Okay, time frame continuity means multiple time frame analysis. We look at daily, monthly, weekly, hourly, and we see, is it in continuity, meaning are they all green or are they all red candles? Okay, and I'll show you a couple examples here in a second, but that's what time frame continuity is. L is just to the long side, so that is just standing for the green. And then week and day is WDs. Okay, so this list right here, and again, this is running through our watch list. Okay, for the bull side, what's going to show up here on this list are stocks that are on the watch list, but also green on the week and day. Okay, so it has to be green on the week and it has to be green on the day to even just show up on this list. All right, so that's the first thing. All right, if it's not green on the day, but maybe it's green on the week, it's not going to show up here. Okay, or if it's having a really good, like let's say it's having a really good day, it's up 5-6% on the day, but the week is red, right? It's red on the week. It's not going to show up here. All right, so there has to be some continuity for these stocks to show up here. Okay. Now, the next aspect of it is GRM. This one stands for, is it green or red on the month? Okay. And these two columns here is just a percent change and a net change, right? And again, this column here is a market percent change, so it's showing like the pre-market or the after hours is included in these. So this looks a little wacky right now, but during the day, this is good to look at because you can see what's moving pre-market. So we like to leave that in there. So, and this is just the net change. Green or red on the month, it just means just basically that is it green or is it red on the month? Okay, if it's green, the box will be green. If it's red, the box will be red. All right, and I will show some examples here in a second. The 2% column is it up 2% on the day? If it's up 2% on the day, it will turn green. If it is not up 2% on the day, it will just stay black like this. Okay. The previous day break, or the PREVD, this means is it above the previous day's high? Okay. If it is above the previous day's high currently trading above the previous day's high, then it will be green. If it is not, it will be black. And if it is getting close to the previous day's high, it will be yellow. Okay, so this is like a stoplight system, right? So it's like green is good, or green is yes, depending on what it is. And yellow means it's getting close. Okay, so when you see these yellow boxes here, it's kind of like a heads up. It'll go from black to no to yellow, which is getting close, to green. Okay. The orb is the opening range breakout, and that is where we look at the opening range, which we determine by the first 15 minutes of trading. Okay, so look at the first 15 minutes, you get the highest point, you get the lowest point, and that's your opening range. All right, so is the price currently above the opening range high? Okay, if yes, it will be green. If no, it will be black. And if it's getting close, it will be yellow. All right, and I will show you some examples of that as well. The EMA, you can see the little thumbnail there, EMA X orb up. Okay, so this is looking at the 9 EMA on a 3-minute chart and its relationship to the opening range. Okay, and this is a good, I guess, continuation type of indicator. So if the opening range has been breached and it's moving up, the next step we would look for is the EMA to then cross over the opening range high. In this case, because we're looking at the bulls. And if it's done that, if the 9 EMA has crossed over the opening range high, then this will turn green. Same thing, black if it's not, and yellow if it's getting close. Okay. Now you can see here, there's just a lot of green up here, right? And that's just because of the way Friday ended. It was kind of crazy. If you look at the bears, this is the bear side, what you'll see if you pull up the bears, and it's a little more mixed. So we will pull some examples from this, just because we'll get a little bit more diversity in terms of what are the differences. Okay, and one thing about the previous day break, as you can see on the bear side, if it is an inside day, if the previous day was inside, then you will see inside marked in blue. Okay, it's a little hard to see when the box is black, but it is there. And we include that because the inside bar breakouts are just considered a little bit more powerful, I guess. There's usually a little bit more to it, a little bit more to the move, and it's a little bit more considerable when it's an inside bar, and especially an inside day. Okay, so we put that there just as another little indication. So our previous scans, when we had the first few editions of the scans, we just had a bunch of watch lists on a screen. Okay, and it was a little bit hard to track what was what. It was a lot of good information, and if you really knew what to look for, it was some really good combinations of indicators and criteria there. But it was hard to visualize it because it was just too much on one screen. And so what we tried to do with these columns here is reduce the whole page of watch lists down to just a few columns and then make it more visual with the colors. Okay, so In the past, like each one of these columns would have been its own watch list, kind of like these, and then you would have had to try to track it, and is it on this one? Is it on this one? And it was just really hard to see what was what, especially during the market, because these, during the market, these are moving all around, okay, because they're sorted by percentage, and so the percentages are just constantly changing. And so it's really hard to track it and see what's what in the old system. So with this system, it's really more visual. All green is really the best play out there at the moment. All red would be the best play for the bear, and the yellows we included in there is kind of like a heads up. So that's pretty much what it boils down to. So let's take a look at some examples. All right, so this is just a real basic chart. Okay, I'm just going to put it here next to um, the bull scan, just to give you some examples of the bulls. And if we just take a look at, like, let's say Beyond Meat, okay, Beyond Meat had a real big day on Friday. And so this is the daily chart. Okay, we're looking at D on the daily. So it's a big green bar, green on the day. And if we look at the week, it is also a big green bar on the week. Okay, so those two green bars, the daily and the weekly, is what prompted it to show up on the list to begin with. All right, and now if we look at the monthly is also green. Okay, despite this long downturn here, it's pretty big drop. It is green on the month. Okay, so it is green on this column right here. Okay. The next column is it up 2% on the day? So we look at the daily, and you could see, yes, it was up 14% on the day. So of course that column is green. And also I'll add here that at the end of the day, you're not making any trades, right? I mean, you maybe you're setting some stuff up for the next day or for the week out or something like that. But for the most part, you're not looking at intraday trading um, in the last like 30 minutes, right? So the 2% column is something that's more applicable. Oh, didn't mean to do that. If you if I click on this, it'll just show you the numbers. It won't show you the colors, but that's all right. The 2% column is a little more applicable in the beginning stages of the day um, because you can see what's moving uh, quickly, right? What's right off the bat, what's jumping off right off the bat, what's up 2% is not always a 100% indication, but it's usually a good indication of something that's going to move throughout the rest of the day. So the 2% column is there. All right, previous day break. If we look at the previous day, okay, right here is the previous day high, and it is clearly well above the previous day high. So that column is green, okay, and in the moment, again, this is at the end of the day, so like it's what it's closing at. But in the moment, when this opened down here, as it's getting close to the previous day high, that box is going to turn yellow. So it's like, okay, get ready. Here it comes. Here comes the play. And if you're playing a break of the previous day, that's when you would go in, okay, at that break. And even it would be even a better play if it was an inside day right here. And I don't see any on the bull side with inside days, but there are some in the bears we can look at. And just strat wise, this is called a two up, right? Two up is the candle type is a two. A one is an inside bar. A two is where it breaks one side or the other. So it's breaking this one side. And a three is um, an engulfing bar or a bar that breaks the low and breaks the high. Okay. So this would be a two up. And then the orb. Okay. For the orb, let's bring in the orb chart. Okay, so this is a chart which is a 3-minute chart. It's got the open here on these dotted line and the close here on this dotted line. And the orb is these two lines here. So the green is the opening range high, the red is the opening range low. And if we just zoom in a little bit here, we can get a better view of it. So these are 3-minute bars. So we're looking at the first 5 bars. 1, 2, 3, 4, 5. Mark up the high, boom. Mark up the low, in that first bar, boom. This is your opening range, okay? And you can use one 15-minute bar, you can use 3 5-minute bars, you can use 15 1-minute bars. Whatever chart you're looking at, that will be the first 15 minutes of trading is what we use. Some people like to use the first 30 minutes of trading. Uh, there's different preferences, but for what we do here on these scans, we look at the 15-minute. I've done not extensive testing, but I've done some back testing, and I didn't find the 30-minute to be any more valuable, I guess, or any stronger of a signal than the 15-minute, and anything shorter than the 15-minute gave too many false signals. So I just found a happy medium on the 15-minute, and I think that's the best one. But that's just my personal preference. A lot of people do use the 30-minute. So what we'd be looking at here is the price above this green line, okay? And as you can see, of course, when it closed, it's well above, right? I mean, it's 14% move, and it was well above 14% at the peak, but it's well above. So what we'd really be looking for is like around this area, right? In the first 45 minutes to an hour of trading, is it above or is it below, or what's its relationship to the opening range? And so you can see here it broke above the opening range, okay, and stayed up there for a little while and then came back down. And this blue bar here is the 9 EMA, okay? So it did have a 9 EMA crossing orb, which would be this last column. All right, so both of these would have turned green. And as it's coming up, as the price is coming up, this orb column would have turned yellow, kind of like CCL here. Would have turned yellow. When it broke, it would have turned green. And then the 9 EMA column, the last one, as it got closer, it would have turned yellow. And then as it crossed, it would have turned green. Okay. Now, one thing about the yellow column, the yellow boxes, is that it will also uh, turn yellow when it's getting close to going back down. So it's also kind of a heads up both ways. Uh, just something to note. All right. So once this did break, okay, this 9 EMA, it didn't cross back down past the opening range high. So, it's not a foolproof system. There's always exceptions, but generally speaking, when the 9 EMA crosses orb, we do get a continuation of the move. And the price did come back down a little bit, not too far, but it did come back down and then work back up. Orb never, the EMA never crossed back down. And the bigger move happened later in the day, around 2 hours in. That's when it really started to take off. So let's take a look at another one here. Let's take a look at CCL. So CCL, okay, pretty wild move there. Friday was kind of wacky, but if we look here, we had the opening range high, we had the opening range low. Um, in this case, I think on Friday, I think a lot of opening range lows were set by the first candle. It's not always the case. Sometimes they'll pop up and put in a high and then come back down and put in a lower low than the first candle. But whatever that first 15 minutes is, that's what it marks. And so we stayed within this opening range for a long time. Okay. So nothing would have been on these two columns, they both would have been black. Okay. And it's up 3% at the end. So it probably, I'm not sure if it would have been 2% around this time or not. Off the top of my head, I couldn't tell you. Okay. Let's look at the daily real quick. Actually, this is the daily chart here. So CCL. So the daily chart is yellow. Okay, previous day would be yellow, and if you can see here, it would have turned yellow because it's getting close to this opening, the previous day's high. Okay, so it would have opened down here, come up, the box would have turned yellow, would have broke above. Then as it's getting kind of back down here, it would have turned yellow again, and it stayed yellow at the close. Okay, so that's where it is in relationship to the previous day. As far as the orb goes, okay, the orb would have turned yellow around here. Okay, would have broke above. The EMA column would have turned yellow around here, kind of in the same, not too far after. And then it would have turned green when it broke above. Okay, and as you can see, it did continue for quite a while, and then I'm not quite sure what happened to it on Friday, but we had a big sell-off. Okay, and that might have just been a market sell-off. I don't really remember, but and so then it crossed back down, and then so we're yellow on the orb, okay, because we're getting close to it, but the EMA is below, so we're black on that. All right, so that's just another example. We can take a look at another one here, maybe that's a little bit different. So DraftKings. All right, so DraftKings is here. It was green on the month. Okay, so if we look at this chart again, we're looking at the month. It is green on the month. It is green on the week. It is green on the day. Okay, so we're looking at, let's see, here we go. We're looking at, green on the week and day to show up here. Green on the month. We got a nice column here. 2%. It was up 2%. It was 5% on the day, so we're green there. Previous day, we don't have a previous day high. So if you look, probably a little hard to see it, but here's the previous day high, and we're just below that. Okay, so that is not green because we are not above the previous day's high. It doesn't count if it broke above and then came back down. So when it was above here, that column would have been green. But as it came back down and went below the previous day's high, it went back black, okay, because it did not qualify. Okay, and then as far as the orb goes, this is another one where it broke above, came back down, broke above again, and then had a big continuation. So that was right around that 11:30. So it looks like a lot of stocks ran around that time. And then came back down, kind of sold off on the end, but not quite as severe as CCL. Okay, but well above the opening range high for both the price and the EMA. All right, so we're green on both of those. All right, so let's take a look at OCGN, who has a red bar there. Okay, OCGN, this is the daily, it's green. Okay. The weekly is green. All right, but look at this big downtrend here. So if we look at the month, because there's still kind of moving in the down direction, it's kind of hard to see. This is a really weird chart. But if you look down here, the month candle is red. Okay, so we have green on the week, green on the day, so it showed up, red on the month. Okay, and the reason why we include, if it's red on the month, we include it here because the month is a longer time frame, obviously. So if something's trending down, if it's having a good week and it's having a good day, you can there's still a possibility of finding some intraday plays. All right, so it was a good day. It was up almost 6% on the day. This is a pretty cheap stock. So honestly, I'm not a stock this low is there's not too many in our watch list, but this one's in there. So if we look at the orb chart, it's going to look a little weird because it is such a low price stock that the movements are in penny increments. So that's why you get these weird looking candles. But um, sometimes, not on this particular stock, but sometimes you can find some intraday plays that are viable even though the month is red. But if the week and the day are green, then you can maybe find something. All right, so let's now take a look at the bulls chart. Okay, 'cause the bulls chart is a little more interesting here. Well, excuse me, with some differences. So, all right, so let's take a look at some of these ones here. Like, let's look at Pepsi. All right, so Pepsi is one that had an inside day previously. So uh, if we look at that right here, okay, this is the previous day that it's referring to. The high of the day was below the high of the previous day, and the low of the day was above the low of the previous day. So the entire trading range is inside this trading range. Okay, so it's considered an inside day. And if you're looking to play the inside day breakout, you would look to play the break of this level. Okay, so it opened up below the low, so it was kind of already in a breakout. So some people will say don't play it if it's opened up below the low. It's not considered a breakout per se. Um, some people will say go for it. It just depends on different preferences. As you can see, it did pop back up, and then it came back down. So and then it came back up at the end. It was kind of a roller coaster there. But this is the inside day that this inside here is referring to, okay? And it is red because the current price, or where it closed, which is right here, is lower than the previous day's low. Okay, so that's what that's about. It is red on the month, so if we take a look at the month, it is red on the month. We can get rid of that. Okay, the month is really red. The day is red, and the week is red. All right. Now this is an inside week. Okay, so if you're looking to play an inside breakout, you could play the inside week breakout of the low, or if it starts running the high, because there is some big swings here, as you can see. So here's an inside week back here, playing this inside week break, uh, caught a pretty big move. Um, so we just ended with an inside week on that, but it is black on the 2% because it is not down 2%. Everything on the bears is just the opposite side, the opposite direction. So we're looking for stocks that are down 2%, and it was not down 2%. It may have been at one point during the day at the lowest peak, but it ended at 0.35% down. Not that big of a move overall. So it's black on that square. We looked at this one already, previous day, and then the orb has two yellows there. So let's take a look at the orb. All right, so the orb. Um, let's see here. The orb is not really showing right. This is showing the close to the high, so I'm not quite sure why that is. Let's take a look at another one. See okay, so if you look at tech is one that's up here. Tech resources. This one is yellow because we're close to the low. Sometimes when the market closes, these get a little thrown off, so that could be why Pepsi was not looking right. It was looking like it was closer to the high than the low, but this one's a little more accurate. Also an inside day previously, so we can see what that looks like. Tech previous day. This is a big candle previously and another big candle. Um, and it looks like it just barely poked above, so it's not going to be 2 inside days in a row. But 2 inside days in a row is considered even more of a consolidation and even more of a potential for a bigger move. Um, but so we had an inside day here. It did break above, but then it didn't really do anything, came back down. The previous day was inside as well. And then we were yellow on the orb, so kind of getting close to that orb, but the 9 EMA was not, so the 9 EMA was black. Okay, so that's what that looks like. So let's take a look at Johnson & Johnson. All right, so Johnson & Johnson's right here. Ended up 0.39, so not 2%. Previous day was below the previous day's low. Okay, previous day's low is here. And it is trading currently below or finished below the previous day's low. So that's red. Yellow on the orb. So if we look at the orb, it's getting close to the orb. Had a big pump there on that last candle. So I don't think at this level it would have triggered that yellow box. But one thing you got to keep in mind about these scans is they're not like 100% real time. Okay. The way Thinkorswim scans is it's every couple of minutes. So it's every like 3 to 5 minutes or so. These will populate. So if there's a big quick move within this 3-minute candle, it may not reflect in the boxes. Okay, so it's down here, it probably would reflect yellow, but because it had a big pop up, it probably didn't catch that because it was the last 3 minutes of the day, and it probably just stayed yellow because of that. But the 9 EMA is not even close, so that one is black there. Okay. So let's take a look at CVX. Okay. So if we look at this one, this is one that is definitely 2% down. It's over 4% down. Okay, so we're red on that box. Below the previous day's low. Okay, well below it. Okay, and I think Chevron had some news here about a buyback or something, which is why it popped up and it came back down. If we look at the month, because it's been trending up like this, the month is actually going to be green. Okay, so that's why it's green on this column. Okay, but everything else is red. So this is another case. Just because the month is green, it doesn't mean that you can't find some intraday plays to the downside. Okay, and it looks like there's plenty of opportunity. So the price is below orb down. The EMA has long crossed, right? Went down, stayed down, tried to work back up, but never really got close. So it's red on both of those. Okay. And I think that's probably about it as far as that goes. Um, so, you know, like I said in the beginning, if you do select just bears, you will just see this. If you do select just bulls, you will see this. And you should be able to see it nice and clear on your phone without having to zoom in. And if you pull up bears and bulls, you will see this full screen to look at everything kind of at once. Let me add one more thing before we go. Like I said previously, when the market's open, these lists are constantly fluctuating. Stocks are moving up and down very quickly, and sometimes it's hard to look across because they're not all green like this. You know, they're black, they're yellow, they're green, they're red, and sometimes it's hard to track what's what. So a good little trick is to just use a screenshot. You can use it on your phone or on your computer, like a um, Windows snippet tool or whatever you like to use, or you can just like screenshot it on your phone, and then it will look just like it is here. So you can like essentially pause the scan and see what's what, and it's easier to look at as while it's not moving. So that's a little tip that um, I like to tell people. The only other thing which I didn't mention earlier is because the opening range is set on the first 15 minutes, you want to give the scans about 15 minutes to warm up, right? The first few minutes prior to the orb being set, these two columns here, the orb and the EMA columns will just be a bunch of numbers because it hasn't calculated the first 15 minutes yet. So it's just a bunch of numbers here. The rest of the columns will be accurate after a couple minutes. Like I said, Thinkorswim scans every few minutes. So after the first like 5 minutes or so, I would say the first three columns will be accurate. Um, but if you really are looking at these orbs, um, the orbs, it is a pretty useful tool. The orb is not part of the strat, nor is the 2%, but it is they're all combined all together. Um, it does give some useful indications of the move of the day for that particular stock. So, um, I always say wait about 15 minutes before you start looking at these scans, or really before you start, putting any um, putting any trades together based off of them. And then just look for the continuity. So like look for green, look for the yellows turning to green, and when you see stocks early in the day that are the first 30 minutes or so, 45 minutes, and you see all green bars, those are going to be some good plays for the day. Of course, things could change. The market fluctuates, obviously, so it's not set in stone. But um, when you see full green bars or full red bars across the board, those tend to be pretty strong plays for the day. So I think that's about it. We'll wrap it up here. If you guys have any questions, you can always DM me on Discord. Uh, if you have any suggestions or any feedback, anything you'd like to see, I'm always open to suggestions. So just shoot me whatever you got, and good luck out there.